One of the questions I've been asked quite frequently lately is, are business brokers good? That's a tough question. And honestly, I don't have a definitive yes or no. But today we're going to dive into some of the pros and cons of working with a business broker, both from a buyer and seller perspective, so you can form your own opinion. Stick around. Welcome to Business Buying for Financial Independence. I'm Tim Delaney, and I help young professionals buy small businesses so they can escape the 9-to-5 and take control of their time, income, and future. If that sounds like you, hit the subscribe button and let's get into it. So the truth is, business brokers are almost a necessity if you're out there looking for a business to buy right now, especially if it's your first business. A lot of sellers end up going with business brokers because when they're looking for ways to sell their business or exit their business, brokers are typically the people that stop in first and help them with guidance, help them with valuations, help them get things situated for a sale. So business brokers kind of control access to deal flow from that perspective. I used a business broker to buy my wine and liquor store. I am not opposed to business brokers. I do feel that some business brokers can be a little bit too pushy. Some of them can be just downright useless in the way that they present data or the way that they share data. Some of them can be, kind of aggressive, both with sellers and buyers, to the point of forcing deals that don't make sense for anybody. But the good ones out there are a perfect matchmaker. They will work with both seller and buyer and bring the parties together in alignment in a deal that makes sense for everybody, including even the lenders and the broker themselves, because they get paid. So let's start with some of those risks from a buyer's perspective of working with a broker. And again, this is assuming you even have a chance to work without a broker. Like I said, a lot of deals go through brokers just because that's the nature of small business transactions. But one of the biggest downsides of a broker, like I mentioned, is that they only get paid when the deal closes. So the seller is almost always paying the broker. They're paying them from a commission based on the sale price. So there's another conflict as well, a potential downside, is that a broker wants to get as much money as possible for that business. They want to push that valuation up as high as they possibly can because they're typically getting a commission, a percentage of the sale price as their payment. So let's start there. If the broker is helping a seller come to a pricing decision on what they want for their business, typically, what the seller is doing is they are looking at their seller discretionary earnings. We talked about this in depth in another video. We'll probably talk about it again in the future too. So check those videos out if you want a little bit more info on that. But just as a brief overview, the seller discretionary earnings is all of the money that a seller is typically making in a year. And that can be some business expenses, quote unquote, that are not really necessary for the business, but the seller is running through the business for tax reasons. Those get added back in to seller discretionary earnings. A business broker is typically going to try to help the seller find as many of those things as possible to help drive up the value of the business. And this doesn't necessarily come from a bad place. The broker is being paid by the seller. So they have a fiduciary responsibility to help the seller get as much money as possible. But some of the brokers out there will stretch those definitions of seller discretionary earnings and the add backs to help boost that price and that value. So that's one downside, one of the biggest downsides from brokers. You really have to watch how they're valuing the business. And then the other, like I said, they don't get paid until the deal closes. So if you're talking to brokers and they know that you have the money to make a purchase and you have the banking connections and the experience, they might be a little bit pushier than they otherwise should be to get you to close that deal as quickly as possible, because that's when they get paid. They get paid at the closing table. If the deal doesn't close, they don't get paid. Now, there is an advantage to having the broker in that capacity to help get over cold feet, to help get past hurdles. It's not just that they're being pushy, but you do have to watch for the ones that are overly aggressive, overly pushy, to just because they just want to get paid. Good brokers out there know that they'll find the right buyer at the right time, and they won't necessarily push you into a deal that is not a right fit for you. One of the other things with brokers, like I said, a lot of small business deals just naturally go through brokers, but they don't operate the same way that real estate brokers do. If you're going to go sell your house, you list it with a broker, with a real estate agent, and their brokerage publishes it on the MLS, which then goes out to all of the other brokers, not only the ones that work in that office, so that all the other brokers and agents in the area know that that house is for sale and they can bring their clients to come and look at it. With businesses, the brokers hold those listings close to the vest. They do not widely publicize them in the same way that houses are listed. Now, they will publish some details about a business. They might say, we have a restaurant for sale in this town. We have a manufacturer of widgets in this area. That area could be pretty wide because they want to protect the identity of the business. Business owners, sellers typically don't want everybody and anybody to know that they're trying to sell their business. So brokers are not necessarily being devious in doing this, but it does make it a little bit challenging to work with a broker because as a buyer, you might find a broker that you love working with, you trust, that's a great person, but they're only going to have a certain number of listings. They're not going to have the widget maker that gets listed with the other broker. They're not going to have the restaurant or the store that gets listed with a different broker. So you're going to have to venture out. You just by nature, you need to network and make connections with multiple brokers, even the ones that might not be the best or that you might not gel the best with, that might not be the same, a good personality fit for you, that you don't necessarily love working with, but you might have to if you love the business that they're listing. So you can't get tied down as a buyer to just one broker. Now, as a seller, you're usually listing with one broker. You're only signing an exclusive agreement with them, so it's a little bit easier to pick only the person that you love to work with. And on that note, we can talk a little bit about why a broker is valuable for a seller. So why do sellers even want to go with the brokers? Well, like I mentioned, that privacy aspect is a huge one. So if I'm selling my business and I list it on Biz Buy Sell myself and put my phone number out there or my name out there, even if I don't initially put the company details up there, smart people will be able to figure out what the business is pretty quickly. And then it might get back to vendors or employees or customers, and they might, start shifting their business to somewhere else. So that anonymity, that extra layer that a broker provides a seller is very important to a lot of sellers. The other thing that they provide is help with that valuation. Like I mentioned earlier, they'll sit down with the seller, they'll go through their financials, and they'll help them pick out those items that the seller might be forgetting about, that the car expenses, the travel. They go to a conference every year that really isn't necessary. They just like to go to Vegas every year for that conference because they like Vegas. But a new owner wouldn't necessarily need to do that as a part of running the business, or they wouldn't need to fly first class. So you can reduce some of that expense item in the profit and loss statement to make the seller discretionary earnings higher and increase the book value of the business. So a broker helps with that layer of to help keep the business anonymous that's for sale, and also helps with that valuation. So sellers are inclined to go with a broker, to list with a broker, even though it will cost them money on the back end. They get those extra pieces of value for that expense. One of the other real big values that brokers provide, in my opinion, is being that middleman during a deal. Doing a business deal can be a complicated thing. It's filled with emotions. There's a lot of skepticism from a buyer's point of view and from a seller's point of view. They're questioning whether or not the buyer is actually going to come through at the end. They're wondering whether the bank is going to hold things up. The buyer is nervous. In a lot of cases, the buyer is putting up a lot of money or signing away a lot of assets or taking a big chance on the loans that they're taking out to buy this business. So there's a lot of emotion. There's a lot of back and forth. There's a lot of things that come out during due diligence that change the nature of the deal. And having a middleman, having a broker can really be a good buffer to help get the deal to the finish line and make sure that everybody stays relatively happy during the process. I had an experience in real estate, which can relate to this, is we had found an off-market deal, 28-unit apartments, reached out to the seller, had a conversation with him, and he decided that he was going to hire a friend of his who was a retired real estate agent to help with the process. So it wasn't going to cost me anything. Figured That's fine. That's good. We decided on a sale price, sight unseen, of these apartments because of the way that the seller described them. They were all supposed to be freshly remodeled, nice condition, all the stuff that he talked about. So we agreed on a sale price before we went to look at them. We went and looked at them with with his maintenance guy and took a look around. And we realized that what he considered freshly remodeled was not actually our version of freshly remodeled. He had redone those apartments about 10 years ago. They were lived in. They needed to be updated again, unfortunately. So what we had to do was go back and add up our expenses of what it was going to cost us to rehab all of these apartments. And then that meant we had to knock about 40% off of the price that we originally agreed to because of all this extra expense we were going to incur. Now, I sent an email to this middleman, this guy that he had hired to help him sell it because he didn't want to deal with the ins and outs of it, and said, hey, we're dropping our price from this to this, about 40% decline because of this and this and this. And I sent him the scopes of work for each apartment that need to be rehabbed. He called me back. He said, hey, if I tell Bob this, he is going to lose his mind. He's not going to take it very well. If I just say, it's going to, price is down by 40%. Let's talk this through and figure out how we can present it to him in a different way. Whether or not you really need to take 40% off the price. Is there a way to negotiate or to work out something else? So I spent a while on the phone with him. We talked through some different things, different ways to present it to the seller in a way that made sense for all of us. In the end, we took, I think, about 25 or 30% off instead of the full 40%. The middleman was able to present it to a seller in a good way that didn't make him fly off the handle at how could we dare ask for such a price reduction. And we were able to get that deal done in the end. That middleman played a valuable role in that. And I know I'm talking about real estate there, but the same thing applies to business. There's a lot of emotion. The seller wants certain prices. They look at things a little bit differently because they know things that a buyer doesn't know. It's hard from a buyer's perspective to take the word of the seller at every point. Not that the broker necessarily makes them honest, but it just helps soften that blow. It helps having a third party talk through those different elements of a deal that can bring everybody back to the table when things get heated and deals go off and on again very frequently during a business transaction. So I talked a little bit about why brokers make sense for a seller, but also just want to touch on why they are so important for a buyer as well. So, as mentioned, deal flow, that's where a lot of deals come from. So from a buyer's perspective, brokers are important because they hold the deals. You're going to have to go to them, or for the most part, you need to talk to brokers if you want a deal. They can also be helpful in structuring deals, in understanding the facts of the business, understanding the financials of the business. You just do have to remember that they are not working for you. You're not paying them. They are being paid by the seller. So the way I look at it is I trust what the broker is saying, but I try to verify everything as much as possible as well. So the brokers can be really valuable, especially for a first-time buyer, because they can walk you through those financials. They can explain why certain things are added back. They can explain what the best way to structure the deal is. And a lot of times they'll also help talk a seller into holding a small portion of the financing themselves, because everybody knows the brokers, the buyers, the banks all like to see that the seller is willing to have some skin in the game, so to speak, of financing a part of that purchase and not just trying to run away from that business as fast as they can. So that's where the brokers can add some real value to a first-time buyer, is the deal flow, helping explain the deal and helping with structure. They also help connect people. They'll connect the buyer. They've worked with bankers and lawyers and accountants and business valuation people in the past. They might even connect you with past buyers that had bought from them in the past. And that's another great resource to help vet a broker, is to ask them for a list of clients that they've helped sell or buy in the past, and try to talk to some of those people, what the process was like. So they do add a lot of value to a deal. So don't just discount them because you've heard some bad things about a broker. And then what do they cost? I know I went through it earlier, talked about it at the beginning of this. Brokers are typically paid by the seller a percentage of the sale price at closing. Really has nothing to do with you as a buyer. However, there are some brokers that will work with buyers specifically, usually on some type of retainer or hourly basis. So you'll pay them some kind of either upfront search fee or some hourly fee for consulting. And that can be useful for certain types of buyers. If you're somebody that's very busy, you have a very high hour job, you travel a lot, something like that, but you really want to go buy your own business, employing a broker to help you find a business might be a good avenue. This also plays into people that are very specific about what kind of business they want to buy. So if you know you want something in the manufacturing of a certain type of product or certain industry or a certain type of restaurant or a certain type of retail store, it could be beneficial for you to go hire a buyer's broker, somebody that will kind of go out on your behalf and try to reach out to these different businesses in your specific niche and find one that might be for sale. Sometimes that broker might take a small fee from you and then ask for a commission from the seller. Sometimes they'll make you pay, a set hourly fee. Sometimes they'll make you just pay one flat fee for a certain number of months of work, of going out and finding a certain number of deals. It's tough to say. All of them kind of price themselves a little bit differently. But for the most part, in the small business world, brokers are paid by the seller at closing on a percentage of the sale basis. Now, as a new buyer, there are kind of 3 rules that I like to follow when I'm dealing with the brokers. The first one I did mention earlier, trust but verify. Trust what they're giving you, trust what's on the website, the first time you glance at the business, kind of just trust those numbers, what they're saying is real, because if you don't trust any of the initial stuff, you'll never find a business to buy. So trust those numbers, but then make sure you go and verify them. And if you need to adjust your offer price or your terms later on, that's perfectly acceptable if you discover something that wasn't necessarily completely accurate the first time. So trust but verify, rule number 1. Rule number 2 is to remember who they are working for. If you're not paying them, they are employed by the other party. What they're saying, what they're doing is all in the interest of the other party. Yes, they're most likely going to try to help you the best they can because they want the deal to get done. But if they're paid by the other party, they are not working for you. Remember that. And then third, make sure you set your expectations early on. If you are first talking to a broker, a lot of brokers will ask what your timeline is for buying very early on. That's one of the first questions they'll ask. Tell them what your timeline is. Don't tell them that you hope to buy in a month or two if you really don't want to buy for a year or two, because they're going to treat you differently and have a different mental timeline in their heads of what they're trying to do for you. So set those expectations early. Tell them how you work. Tell them how you operate. Tell them how you make decisions. If you are somebody that makes a decision like that, tell them that. They might need to walk you back on certain things or tell you to slow down on certain things. If you're somebody that's going to take a week, 2 weeks, 3 weeks at every new piece of information to process it, let them know that. You might find some brokers that just don't want to work with you because of that, but it's better for them to know that and for you to find certain brokers that will kind of tolerate that, will work with you on your timeline or help you speed it up with additional information. They might say, okay, what can we do to get you to make that decision faster? How can we help you process this information faster? So set your expectations, explain how you operate, explain what you do, just so that everybody's on the same page with how the process is going to go. The more brokers you talk to, the more you'll realize which ones are good and which ones are bad, which ones are just trying to get their commission and which ones are actually trying to put together good deals that make sense for the long run. Set up meetings, set up calls, talk to as many as you can so you get a better feel for which are the good and which are the bad, because maybe that perfect business for you ends up being listed with one of the bad brokers. If you already knew how to figure that out, you might still be able to work with that person because you've learned enough from talking to other brokers on how best to deal with that person and watch out for what they're trying to do in terms of rushing you or in terms of blatantly tricking you or something of that nature. So talk to brokers. You'll get a good feeling for which ones are the good ones, which ones are the bad ones. And it's not always good or bad. Sometimes it's just personality versus personality. We don't all gel with the same people the same way. So just get an understanding for who's out there and what they can do for you and how it makes sense to work together. So bottom line, are brokers good or bad? There's really no good or bad. They're definitely an important piece of any small business transaction. You're going to encounter brokers. Most likely you're going to need a broker to buy a business and or to sell a business at some point in your career if this is the avenue you're going down. So get used to working with them, understand how they operate, and go find the good ones. There are tons of great business brokers out there that really care for their sellers and their buyers and are out there looking to make the best deals possible. I'll get some brokers on in future episodes. If that's of interest to you, please make sure you let me know in the comments or shoot me a message. And if you enjoyed this, I would really appreciate it if you took a second to hit subscribe on whatever platform you're listening or watching. That's all for today. Cheers. Thanks for listening to Business Buying for Financial Independence. If you're serious about owning your time and building long-term wealth, make sure to subscribe so you don't miss the next episode.